So you probably hear people talk about index funds and ETFs interchangeably. So what the heck is the difference between an index fund and an ETF? Today, we're going to talk about it. So first of all, what is an index fund? Well, an index fund is just a mutual fund that's designed to mirror or mimic an index or financial market. So for example, an S&P 500 index fund mirrors the S&P 500. Now the cool thing about index funds is they have lower expenses than a traditional mutual fund, because a traditional mutual fund has all these fund managers and all these employees in place that have to work to actually buy and sell stocks. Whereas an index fund is just mirroring and copying the index. So an index fund just gives you broad market exposure and lower expense ratios. Now, an ETF stands for Exchange Traded Fund. And what an ETF is very similar to an index fund. It still mirrors an index, and it's there to follow a specific financial index or a financial market. But the difference is an ETF trades like a stock. So an index fund, when you buy it at a set price at the end of each trading day. But with an ETF, you can buy it intraday. So in the middle of the day, if it's 2 o'clock in the afternoon, you can buy an ETF at the current price that it's at. So that is the major difference between an index fund and an ETF, is an ETF actually trades like a stock, where an index fund trades more like a mutual fund. So here's the major differences. The first one, like we just talked about, is that the ETF trades like a stock. So you can trade it each and every day. The second one is the cost to get into each one of these. So for example, an ETF only costs a few $100s, and some of them are even less than $100 to get into. Whereas an index fund, typically you have to put down $3,000, $4,000, $5,000 just to get into a typical Vanguard index fund, for example. Now, Fidelity has released new index funds where there are no minimums, and I think that's going to be the norm in the future. But as of right now, there is a price difference between getting into an index fund and an ETF. The third difference is the capital gains tax you'll pay. So I don't want to get too much into the weeds on this, but when you sell an ETF, you're just selling it to another investor, just like you would with a stock. So you pay capital gains tax. But when you sell an index fund, you're technically redeeming it towards the fund manager, and the fund manager will sell the security to give the cash to pay back to you. Now with a mutual fund, this happens a lot, but with an index fund, it happens less frequently, which keeps the costs low because you're not really buying and selling very many things. You're just mirroring the index. But an ETF does have less tax liability than an index fund would. And the last one is just the cost of owning it. So you can look at something like an S&P 500 index fund, and the cost or the expense ratio will be 0.05%. And then you go look at the ETF, and the expense ratio is 0.03%. Now, these are honestly minor differences, but a lot of times the cost differential is there. So these are the key differences between an index fund and an ETF. They are very similar in the way they trade. They're both well diversified. They both mirror an index. They both have very similar returns, but these are the key differences that we talked about today. If you have any questions, leave them down in the comments below, and don't forget to like, subscribe, hit that notification bell as well. And if you liked this video, check out a few more videos that we have here, because I know you're gonna love those, and we'll see you on the next episode.